So, Fed week has arrived again, and just wanted to go over really quickly what that means for us and what that could mean for mortgage rates. So, what's happening is we already pretty much know that the Fed is going to cut 25 basis points on Wednesday during their meeting, but we also already know that that's already priced into the market because everybody already knows it's going to happen. So that's not going to change. The fact that they do that, that's not going to really change anything when it comes to the interest rates. What matters more is going to be their comments afterwards. Fed Powell always has a press conference afterwards, and he will make signals during that press conference as far as what they expect to do during future meetings. And those signals will be things like, talking about the weak labor market potentially, or talking about inflation, things like that. If he talks about inflation still being difficult and being worried about it, that might signal that they may do less cuts later, and that might cause mortgage rates to go up a bit. If he talks about the weak labor market and how they believe that they need to really watch the weak labor market, that might signal more future cuts, and that could cause the rates to come down some. And so that's kind of the big thing going on this week. Now the other possibility here too is that there is a trade deal supposedly being negotiated with China, and if that trade deal were to take place, that could potentially cause rates to rise a bit, simply because of more people investing in the stock market as a result of that trade deal and taking money out of the bond market. So anyway, those are the sort of things that we're looking at right now. Just to share a little bit more data here on my screen. If you look here, we've been in this kind of pattern. We did drop down here some. We've been in this pattern here on the 30-year mortgage bond for some time. As the mortgage bond goes up, rates come down. So you see, we were way back here. So we've made a lot of nice progress, but we've kind of stalled right here. And so now we're looking to hopefully break above this. We just haven't been able to do it. We've broken above it a couple of times, but by the end of that day, we were back below it. Also right here, we broke above it, and then we came back below it again. So this is a trend that has been going on for a while, and if we can break above it and stay, that would be a nice thing. That would mean that rates are the lowest they've been in like 3 years. They already are for the most part at that level, but this would be lower than we've been so far since rates have been coming down. So anyway, I wanted to cover that briefly here and go over some of that data. I will do another update Wednesday after the Fed meeting and kind of go over some of Powell's comments and what it probably signals and how it's impacting the market by the end of the day on Wednesday. So I will do that update probably. That's probably going to be a little bit of a later update, because I probably won't do it until after Powell's comments, and then after seeing how the market reacts to those comments. And so anyway, that's pretty much it. I wanted to cover that really quickly. Fed week's always an interesting week, and one where we're kind of on pins and needles a little bit until we see how it affects the market. So that's it. I hope you have a great rest of your day, and talk to you later. Thanks.